Okay, everybody, here we go. It is me, Gregory Mannarino. It is Sunday, August 28th, 2022. Welcome to my newest segment of Markets A Look Ahead. I have a bunch of stuff I want to talk with you about. I'm sitting here this morning just writing stuff down. What I want to do with this particular segment is kind of what I always do. I want to look back before we look forward just a little bit here. Let's just talk about Friday here. We heard from the Federal Reserve Chairperson Jerome Powell, the thing here over at Jackson Hole. And his statements still bother me like you can't possibly believe. They're like burned into my brain here. And what I've been doing? I've been searching through the mainstream media, even alternative media sources to try to find out, what other people's take is on what he said. Now, what am I talking about? He specifically said this: U.S. households and U.S. businesses will suffer moving forward as the Fed fights inflation. I just don't understand that. If in fact what he's saying is true, and we know it's not, that the Fed is going to fight inflation aggressively, they're going to really do something about it this time, how would that cause U.S. households and U.S. businesses to suffer? Unless, of course, he realizes that in no way, shape, or form is inflation going to let up anytime soon. Let's just look over at Europe, for my European friends here, friends over in the UK as well. Energy prices out of control, inflation continuing to rage. Now, here in the United States, there's an interesting phenomenon occurring, and you know what I'm going to tell you here. Prior to every single midterm election that you want to look at, go as far back as you want to look, the Federal Reserve plays a game with the current administration, whichever administration it is. They keep energy prices suppressed. They want people to go fill up their pumps or look at energy prices and say, hey, look, the current administration, they really care about me. They're making sure energy prices are low. So this phenomenon here has temporarily, in my view, even though inflation is rising here in the U.S., it has put a little damper on it, okay? And this is temporary. What you're seeing in other parts of the world with regard to inflation is undoubtedly going to hit us here as well. And this is why Powell is saying U.S. households, U.S. businesses are, not may, are going to suffer moving forward, okay? Because, again, if the cost of living was dropping, well, that would be positive for U.S. households and U.S. businesses, but it's not going to happen. It can't be stopped. Not only can surging inflation not be stopped right here, the fact of the matter is, it's going to get much worse no matter what the Fed does. Again, they're selling a big, fat, ugly lie. That big, fat, ugly lie is simply this: by nudging that federal funds rate, they're somehow combating inflation. Nudging that federal funds rate from here until kingdom come, whenever that is not going to do a damn thing. They're talking about the overnight lending rate here, but they want you to believe, and they're using the mainstream propaganda ministries as a weapon. They are weaponizing this entire fake news propaganda bullshit to try to convince people that, we're really going to do something about inflation by nudging that federal funds rate. How about this? And we've covered this. I think I talked about it just on Friday. The Federal Reserve has, in fact, been nudging the federal funds rate for months. What has happened? Inflation has continued to rise. Make that up. Why are not the mainstream media outlets bringing that up? How about this? So the Federal Reserve has been raising the federal funds rate. They're raising rates, huh? How is it that lately rates have actually kind of plateaued and in some places have actually come down? Because again, look, you're being lied to on a massive, massive scale, and you already know that if you follow this blog. Another thing that bothers me? I was watching Bloomberg this morning, Wall Street Week, and they had some freak on there talking. And going back to the 2008, financial crisis, who created the 2008 financial crisis? Who's responsible for the entire financial system of the world? It's central banks. More specifically, this is the Federal Reserve. Who's responsible for the current state of surging out of control inflation here in the United States and around the world? It's central banks. But again, where's the outcry? Why is no one being held to account here? I'm going to leave that up to you, and maybe you want to comment here about that. So anyway, with regard to that, I want to cover, like I'm saying, a bunch of stuff here. So no secret, Powell on Friday rattled the markets with his talk about being aggressive, raising rates moving forward. In my view, as long as that 10-year yield remained stable, look, the debt market what is the debt market? Let's just, not actually what it physically is, but what is the signs that it's telling us right now? There were some signs of instability here. We watched that 10-year yield, bang, 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 come down, bang, 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 come down, bang, 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 come down. The only reason why we're seeing this kind of motion, every time the 10-year yield here is rising, and bond yields were rising around the world, central banks are getting in here and they're buying more, as you and I expected that they would. Okay, now, I really don't give a damn what comes out of the mouth of any central banker. I mean, it's all fake. It's all propaganda. Okay, so they can say what they want. Me and you, we're going to follow two things: the 10-year yield and the Mannarino market risk indicator. Free to everybody. Link in the description of this video. All right, now let's just say come tomorrow. All right, I'm not sure what the market is going to do, but I don't care. What I will be doing is watching that 10-year yield, watching the MMRI. The MMRI actually came down on Friday, meaning risk was waning a little bit. Excuse me. 10-year yield 3.03. If in fact, looking ahead here, okay, we see that 10-year yield drop, and I believe there's a high probability that the 10-year yield is going to drop below 3 this week. Okay, could I be wrong? Absolutely. But you know the scenario here. If in fact we see that 10-year yield start to spike, what does that tell you? Well, that says the market is not going to like it. The debt market is going to be demonstrating some instability. Okay, the market's going to hate that. You're going to see stocks get hit. If in fact central banks, the Fed gets in here, starts to buy, 10-year yield comes down, MMRI drops, you're going to see the stock market get off on that. You understand? So like I say, all the time, forget the stock market for just a moment. All right, everyone's focused on the 1,000-point drop, which occurred in the Dow Jones Industrial Average after Powell opened up his pie hole, Look, I don't give a damn. Markets fluctuate. Markets always overreact. I'm not saying that was an overreaction. For all we know, we could see a big sell-off here in the debt market and rates start to spike out of control. But I don't think so. I think the most likely scenario, most likely, and I want to hear from you. What do you think the most likely scenario is this week? Are we going to witness the 10-year yield spike and stocks get hit harder? Or are we going to watch that 10-year yield drop along with the MMRI, and is cash going to make its way into the stock market? I think if we see the 10-year yield drop, I can promise you there's going to be a lot of bottom fishers here. I don't pick tops and or bottoms. You know what? Just real quick. Yes, I am continuing to buy ticker JEPI. Okay, I happen to like this fund. I like the way it's structured. It's diversified. Selling options onto the market to gain income. Thing pays over 9% per year, and this is spread out monthly. I mean, it has a built-in hedge. You get paid a dividend every month. Nice way to generate some cash flow here. And I think everybody needs a little cash flow, don't you? All right, anyway. So let us move forward a little bit. What I wanted to talk about. So Bitcoin has taken a substantial hit as of late. It has fallen below my 21,000 floor I was looking at. If you recall, I've said many times over the last few months, I said I wanted to see Bitcoin hold above 21,000 before I jumped back in. It has fallen below that. So what does that mean? Well, I'm going to sit back. Don't plan on buying it anytime soon. I will keep all of you on top of that. What we will be doing, you and I, listen to me. Listen to me very carefully here, okay? If you believe, like I do, that the global debt will continue to surge higher, the global debt bubble will continue to be fueled by any means possible, understanding that central banks are working with their respective governments across the globe here to create any reason imaginable and things you can't even dream of to continue to inflate wars, expansion of wars, mysterious disease processes with strange names, things like the Inflation Reduction Act. Can't make that one up, huh? Imagine buying your way out of inflation. Well, why don't we just make it $5 trillion? Like I said, then we'll have no inflation. You can't make this stuff up. And there's no outcry in the street. People are not up in arms. They're being distracted. They're being told to look here, not look over there. Not only that, you see what the mainstream media does is they pick a particular very divisive kind of topic, all right, or about a particular person or whatever it might be. And they tell you exactly how long to focus on that by headlines. Look at what's happening here. Bang, bang, bang. And they keep people distracted for as long as they need to. Well, they can do, the government, the Fed can do whatever it wants over here while people are focused over here. It's a mechanism that goes on over and over again. Anyway, going back to what I was saying, if you and I realize global debt's going to continue to inflate, what do you want to do? You want to take the other side of that trade here. You want to bet against the debt, become your own central bank, hold hard assets here. Talking about energy real quick, I alluded to this earlier. Around the world, we're seeing energy prices surge, but we're seeing the phenomenon occur, the midterm phenomenon. Let's call it that. The midterm phenomenon with regard to energy, where energy prices just miraculously happen to come down right prior to every single midterm. I think there's opportunity here to possibly get in on energy companies, buying commodities, crude oil. I think you want to look into this stuff too moving forward, but always do your own research here as to, and think about what it means. Do you want to be more aggressive and take more risk, or do you want to be more stable? See, me, in my old age, and I'm getting older, I can't believe I'm 57 years old now. I've become more mellow and worldly. So I'm taking a more kind of like, buying JEPI for me. It looks like a way to remain sane. What I like about JEPI, I'm just going to cover this real quick. It's diversified. Not only is it diversified, the way they rotate cash through sectors I happen to like. I also happen to like how they're selling options onto the market, which is what I used to do myself. I used to rack my brain crazy, generating income for myself as I was investing on the long end of the market. So I like the structure of JEPI, but I'm not saying it's for everyone. You should look into this yourself. It has done phenomenal, except on Friday. Got hit pretty hard along with the rest of the market, but that's okay. All right, people, look, you have a very good understanding of what's going on. I think I covered a lot in this video that's important. I want to hear from you. I asked a couple of questions here. Please answer them. What do you see going on here? Again, there's always strength in numbers, and this is not just Greg Mannarino's thing. This is our thing. It's a humongous global family. There are people from all over the world here, and I love that. I absolutely love it. All right, people, look, that's it. I will see all of you in the morning. Enjoy your Sunday, and I'm going to go work on my car. See you later.